Today topic: Steak and Shake buys $10 million Bitcoin. Is fast food becoming the new Wall Street? What if I told you that your burger is no longer just a burger? What if, behind that simple fast food order, a 90-year-old American restaurant chain is quietly turning fries and milkshakes into Bitcoin? Yes, this is not a joke. Steak and Shake, a brand that has been serving burgers since 1934, has officially purchased $10 million worth of Bitcoin, marking one of the most surprising corporate moves in recent crypto history. This isn't just a headline. This isn't just another "company bought Bitcoin" story. This is something much bigger. Because Steak and Shake is not a tech firm. It's not a hedge fund. It's not Silicon Valley. It's fast food. And that's exactly why this move matters. Today, we're breaking down why Steak and Shake bought Bitcoin, what the Bitcoin to burger strategy really means, why this could change how companies think about money, and whether this is smart innovation or dangerous speculation. Let's dive in. Steak and Shake recently confirmed that it has allocated $10 million of its corporate funds into Bitcoin, officially making BTC part of its corporate treasury strategy. This isn't a side experiment. This isn't a PR stunt. The company described this as an escalation of its long-term vision, a vision it calls Bitcoin to burger. A strategy where operational cash flow, daily revenues from food sales, and traditional fiat money are directly converted into Bitcoin. In simple words, people buy burgers. Company earns dollars. Those dollars become Bitcoin. And that's where things get interesting. Why this is a big deal? Let's be very clear. Steak and Shake is 90 years old. It has survived the Great Depression, World War II, inflation cycles, financial crises, and the rise of modern franchises. This is not a young startup chasing hype. This is an old, experienced business making a calculated decision. Which raises an important question. White right pointing backhand index. Why would a fast food chain trust Bitcoin with its money? The real reason: cash is losing value. Here's something most people don't realize. Big companies don't sit on cash because they love cash. They sit on cash because they need liquidity. They need safety. They need flexibility. But in recent years, cash has become a problem. Inflation quietly eats purchasing power. Interest rates change. Governments print money. And suddenly, the money you saved is worth less every year. For a company like Steak and Shake, holding millions in cash means crossmark losing value silently. Crossmark no protection against inflation. Crossmark dependence on traditional financial systems. Bitcoin offers a different narrative. Bitcoin is a treasury asset. Bitcoin is not just digital money. For companies, it represents a fixed supply, only 21 million coins. A hedge against inflation. A decentralized asset outside government control. This is why companies like MicroStrategy, Tesla, at one point, and now Steak and Shake, are exploring Bitcoin as a store of value. The message is simple. If our money is going to sit somewhere, let it sit in something that can't be printed. Why fast food makes this even more powerful? Here's the genius part. Fast food businesses have high transaction volume, constant daily cash flow, predictable revenue streams. That means small profits, repeated millions of times. Stable income, not dependent on market cycles. Now imagine converting a portion of that daily flow into Bitcoin. This creates Dollar cost averaging into BTC. Reduced timing risk. Long-term accumulation. Steak and Shake isn't trying to time the market. They are simply saying, we sell burgers every day anyway, let's store some of that value differently. The Bitcoin TO burger idea explained. This initiative is more than accounting. It's philosophical. It suggests a future where everyday commerce feeds decentralized assets. Real-world businesses back digital value. Bitcoin becomes part of operational strategy, not speculation. In a way, Steak and Shake is testing a model where real economy, crypto economy. And that bridge is extremely powerful. Public reaction, mixed but loud. As expected, reactions were divided. Supporters say, this is forward thinking. Bitcoin adoption is going mainstream. This proves crypto isn't just tech hype. Critics argue, Bitcoin is too volatile. This is risky for a food business. What if the price crashes? Both sides have valid points. Which brings us to the risk factor. The risk nobody can ignore. Bitcoin is volatile. There's no sugarcoating that. Prices can drop 20% in weeks. Spike suddenly. React emotionally to global events. For a company, this means balance sheet fluctuations, shareholder concerns, accounting challenges. But here's the key detail many miss. Steak and Shake didn't go all in. $10 million is a strategic allocation, not reckless exposure, not gambling the business. This is controlled risk, not blind faith. A signal to other businesses. This move sends a message. You don't need to be a tech giant to adopt Bitcoin. If a burger chain can integrate BTC into treasury, manage volatility, think long term, then other industries will start asking, why not us? Retail, hospitality, franchises, even small businesses. This could quietly open the door to mass corporate adoption. So here we are. A 90-year-old fast food brand, turning burgers into Bitcoin, challenging traditional finance. That's all for today's video. I'll see you in the next one. Thanks for watching.